10:05, so I'll kind of starting on time, right? So good morning, everybody. Good to have you guys on, right? And when the rest of people come, like Elijah now, we just let them in and continue. Hey, morning, Elijah. How you doing today? Good to have you on. All right, glad to hear that, man. All right, 1 second. Huh? No, I can't. Why can I not? No. Sorry, 1 second. Weird. I thought I was able to do that. Anyhow, sorry. Yeah, guys. So I want to starting now because, like I said, we have quite a bit of notes. I'll see if I can kind of. I don't want to say speed through it because I don't like to move too fast or anything. Now I know budgeting can be a bit of a sore point for a lot of people because of some of the questions and some of the way you have to do the questions. Long story short, the way you have to interpret things and put things together. Right? Well, let me just let in Amara and say good morning. Good morning, Amara. How are you? Good to have you on.
I'm good too.
Yeah, I cool, girl. I cool. Trying to be good. All right. So yeah. Right. Okay, guys. So yeah. So a budget, right? So I mean, most of us are familiar with the term budget, and some of you may have done this topic in school. I may have met the the sales budget as a more of a Form 5 thing, as not a big deal. The production budget and the direct materials purchases budget, those tend to be where the oh yeah, and then of course you have the receivables collection schedule and the payment schedule for accounts payable. So those things get a little complicated with the timings of the payments, and of course, interpreting the words, understanding what they mean, and putting them into the calculations, right? So budgeting was one that I found challenging when I was first doing it, but it's not that bad once you get the hang of it. Didn't somebody just ring the doorbell? But when I say, and I actually hearing it today, like during the week, like I wasn't hearing that notification at all. I don't know why. Yeah. So yeah, I kind of understand when some of y'all ask me for me to go over it again. So I don't mind. All right. Okay. So we'll see if she kind of pops back in. I know on Thursday there was a fire up on my side that actually burned the fiber optics for Flow and for one of the other cable companies. So that disrupted. Luckily upstairs, so downstairs in class I have Flow, upstairs I have Digicel. I'm a folks, so I was able to switch to that and finish the advanced class. All right. Anyhow, so folks, we have some notes to get through here. So I know some of y'all might have taken it last week. So for some of y'all, it might be a bit of a review. For some of y'all, it might be kind of going over the first time. So let's just jump into it and see how we do, right? So the first thing we need to do is, of course, define the term. And of course, let's take off. Right. So a budget, right? So the first thing I want you to always think about with a budget is that it is a plan. Right? And you could have a budget for your money. That's usually what we think about for budgets. But anytime you do any kind of plan, for example, if you have a study plan, and you say, okay, from 8 to 9, I'm going to do accounts. I'm going to take a break from 9 to half 9. Then from half 9 to 11, I'm going to do econ or MOB or entrepreneurship, whatever the case is, right? Once you have a plan for how you are using any resource, that is a budget, right? I'm not sure of the etymology of the word, as in how it came about or what the different roots mean or etc., right? But that's what it is, a plan. So it's a plan for the use of a resource, right? Or of resources, right? Because it doesn't necessarily have to cover just one resource. It could cover multiple resources, right? But usually we try to kind of focus things on one thing at a time, right? So, okay, so maybe I could actually push this across so we have a little space. Can I continue all the way down? Do I need to? I don't know. Right. It shows that's not how you spell it. It shows the inflows or sources of the resource as well as the outflows or uses, right? So it shows where the resource is coming from and where they're going, right? So that's kind of like how I like to explain what accounting is, right? So even at the Form 4 level, let me let me all right, cool. Hey, morning, Shekinah. How you doing? Good to have you on. Yeah, missed too much. We just kind of started going through some of the notes there. Jabari. Yeah, morning, what vibes? Yeah. Okay, right. So yeah, it shows. So like I was saying, when I explain to people now doing accounting and people doing accounting for years now, right? When we think of accounting, right, it shouldn't just be T accounts and income statements and debits and credits. The word account means to explain. If the police were asking for an account of a situation or some kind of altercation or an event, the account is the person they're asking to say, well, we had a debit accident and credit. No, what happened, right? And that's all accounting is. It's explaining what happened to the money, right? Because why do people start business? To make a profit, right? Blah, 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 all that to come back and say, okay, so we need money for the business, right? Where's the money coming from? The owners or entities other than the owner, what we call, so capital from the owners, equity capital, and then debt capital or liabilities from entities other than the owner. And what do we do with these resources? Well, we buy assets and we pay for expenses, right? So where the money come from, where it gone? Because at the end of the day, you want to know that you've made money on top of what you've put in. Otherwise, you're just losing money and the entity is going to be dead in the water sooner or later unless something changes, all right? Okay, so it shows the inflows and outflows of the resource or the sources of the resource and the uses of the resource, all right? So usually the word budget is used in the context, right? In the context of financial planning. Did I not? Oh, financial planning. In this context, right, it shows the inflows or sources of money, which is what I was just talking about, right, for an individual or business entity, right, and it also shows the uses of that money, right, the expenditure. Yeah, guys, and then just on a side, budgeting, as in personal budgeting, is something very important. You're going to want to start to get a handle on very early on, because what gets measured gets managed, and if it's not measured, it's not managed. And there's another person on YouTube I listened to, a girl called Cody Sanchez, and she had a quote. I don't think it's her quote, but she says, "Money is a very cruel mistress. She demands your attention, and if she doesn't get it, she's gone." Right? So you got to be careful with that. Okay, so reasons for budgeting. Right. Well, like I just said, if you don't watch your money, it'll just be gone. Right. Okay. So one, right, to assess the feasibility of a course of action. Okay. So feasibility means, like, does this make sense to do? Actually, I was watching Daredevil Born Again on Disney Plus recently. And one of the episodes they were talking about a feasibility study. Right? I know some of you all do MOB, some of you all do entrepreneurship. So that might be something you might have heard of, right? It means a study of, does this business venture make sense? What is the money coming in? What is the money going out? What about the non-financial implications, the impact on the environment, traffic, pollution, that kind of stuff, you know? So from a very straightforward business perspective here, right? So does this make sense given the existing and future resources or conditions? Cool. All right. Some water. Oops. Right. So it's also a guide to action, right? Or a guide to action or how to use resources or sequence events, right? Some of you all, like I said, doing MOB, so you might know, ooh, what I think about is it project management, and you have these things called critical paths, and you have certain events that have to take place in order for other events to take place, right? So sometimes you have, and then some of us play video games too, right? And you have to build up whatever the currency is to buy a particular item before you can go on a particular mission. So you had you have all these things in play. So a budget kind of shows you your limitations, financial and otherwise, and it helps to guide action or use resources or sequence events to know it kind of ties into feasibility, right? So these points are not necessarily exclusive or mutually exclusive of each other. Right now, performance evaluation. You know, there's a word valuation and then there's evaluation. This is unit 2. Yeah. So when students tell me they're doing stock evaluation in school, it just makes me cringe. But I don't know if it's their fault. I don't think it's their fault, and I don't know if the teacher's calling it stock evaluation. But I guess maybe they're thinking they evaluate any value. I don't know, whatever. But yeah, so performance evaluation. How did I slash we slash oops, sorry, that's too many slashes. We slash the weasness do or perform relative to a goal. Right? So your budget, you will have a projection, right? You will have like a forecast, a projection, an idea about what you want to achieve. It's a definition of success, right? You go down a particular path. You want to know, hey, I'm doing this particular thing. How do I know if I have achieved my goal? How do I know if I have succeeded? So you have to have a definition, right? A lot of people don't do that because then, of course, when they don't succeed, it hurts. It's a damage to their pride and their ego, right? I'm not immune from that either. And then, of course, you have this thing called the psychological immune system that helps you to make excuses and kind of shift responsibility and blame. It is already on YouTube. Yeah, it's there. Yeah, okay. So, yeah. But in order to be able to progress, you have to be able to, as he also says, stare nakedly at your inadequacies, see what you know, what you don't know, and say, okay, cool. I don't know this yet, but I could learn it, right? Or I took this particular action. I wanted to, let's say, for example, I need to start posting more on social media. My goal is 3 posts a day. Currently, I have 0. And I've had 0 for quite a long time, right? Every now and again, you'll see a little blip on your radar. Like I think Tuesday, I posted a couple of things. I can't remember why I was asking what crash. Anybody want a crash course in CSEC POA? And then somebody asked for tips for studying. I kind of built on that. But it's just to get it, just to make one in the morning. Might kind of spur others, but I don't, So yeah, so it weighs on me, and it also kind of paralyzes me to think, well, if I can't do 3, I might as well not do any. Anyhow, that's a whole different story, right? So you have to be able to assess your performance. So you have to be able to take criticism, constructive criticism, and own up to your shortcomings, right? So a budget provides a standard against which performance can be measured, right? And this actually kind of helps budgeting to tie into the next topic, which is standard costing and variance analysis, right? Right. So assists in coordination and communication is a popular one across. Simple was a Caspel sometimes, across the organization. See how easy that one was? Right. Or slash between departments. Yeah. So let's put that. Right. And agreed upon plan helps to guide action toward a common goal or objective. Right. Yeah, guys, I really want to emphasize that one because recently I feel like I don't make like a lot of progress in terms of the different areas in my life I would like to make progress in. And if I look at this, because when I come home from dropping the kids to school, I just kind of veg out on the couch, help my wife take care of the baby. She might go and sleep, and then the babysitter comes at 12, and then I might now make lunch. So I really had to reevaluate how I approach things, and it really it comes down to me and my wife as a couple communicating. Hey, look, we want to get these things done. This is how we're gonna do it, right? And like I said, it starts there. It starts from a personal perspective, and it builds up into organizations. Organizations are usually way more than 2 people. Sometimes you could, especially with AI now, you can have instead of an entrepreneur, you have this thing called a solopreneur, which is one person kind of doing everything, right? And with AI tools, it has become more possible now to manage it a bit more easily, right? Even today, before class, I was just scrolling through TikTok and I saw somebody is explaining math on TikTok and they're using like an AI Sabrina Carpenter and an AI Will Smith to talk about math and like advanced concepts too. So it was interesting. Actually, somebody made an AI of me trying to promote their business. I don't know if I told you guys about that. Yeah. And we keep reporting it, and it's still up and not being taken down. And people keep calling me like, Chris, you really invest with these people? Like, nope. Anyhow, yeah. So having stated goals and having communicated and made sure everybody's understood these goals across departments, across organizations is very, very important, because everybody needs to know at what we are aiming. Where are we going, right? It's like if you're trying to drive a car and 3 wheels going one way and the third wheel going this way, you're not going to get damage. Might happen. You're not going to get where you're going as quickly as possible. You're going to have drag, right? And your car might get damaged, right? So you want to have everybody heading towards the same direction, right? So budgets are a good thing in terms of helping with these things, right? We need to know, does this course of action make sense to pursue, right? And we need the budget to guide us. Hey, we have this much resources to do this with, so we have to make decisions as to what is the best course of action, what is the most cost effective, what is the most affordable course of action. And then when they take any action, how did we do, right? Look, we planned to do this, we did this much, that's great. Or we planned to do this and we did this much. Wasn't so great, why? Because that's the next question you have to ask. Why did we not achieve what we wanted to achieve, and how do we fix it, right? And you can't let your ego or your pride get in the way. You have to kind of, as Tom says, you have to kind of build your identity around the identity of a learner, right? Mistakes are going to happen, and he says failure is the most information-rich data stream on planet Earth, right? A lot of times when we fail or do bad, it's really because somebody else had an idea about how we should have done, and they've imposed that on us. Now, that's not necessarily a bad thing. People want the best for us. There are people who want the best for us. But at the same time, there's more than one path to success, and success could be achieved in different ways and looks different for every individual, right? And the interesting thing about it is we get to decide what success looks like for us, right? Anyhow, different conversation. So we have reasons for budgeting done. Let's talk about approaches to budgeting, right? Approaches to budgeting. Let's bold that so it kind of stands out. All right. So I'm sure some of you all did MOB and some of you all have done this already in class. So we know, right, we have the traditional or top-down, right? Also sometimes called the autocratic approach to budgeting, right? Which is sometimes called the imposed budget. Right? So if you're not familiar with what this is, an autocrat is somebody who is in charge. Sorry, I have an S. Did I miss an S? Oh, yeah. Thank you. All right, cool. So top down, right, or autocratic approach. So an autocrat is somebody who is in charge. That person is setting the rules, setting the objectives, and all you get to do is whatever they say to do. You don't get to say, hey, sir or miss, this might work. They don't want to hear that, right? I'm sure some of you all have teachers like that. Yeah, I think what's with the SB? Tony. Yeah, we'll talk about the SB. Let me know how that's going so far. Right? Yeah. So sometimes you don't know when to how to stay out of the way, how to get your stuff done. Because sometimes you don't have any recourse, right? So in this approach, right? In this approach, the upper management, right, decides on the budget, targets, right, with no feedback or consultation input from lower level workers. Right? This is kind of how I feel about any syllabus coming from CSEC. They say this, talk to their stakeholders, etc. But I don't know, maybe they do. But these syllabuses just feel like they come from people who have plenty letters behind the name and are totally out of touch with the reality of classroom environment. Right? It's too much to do in too little time, and it's especially with SBAs or projects, those things have their place, and I thoroughly believe it's not on any of these syllabuses. But that's a different conversation for next time, right? It just seems to me we just have to do what they say, and we have no choice in the matter. We have no way to express how we feel about it or unfit to be taken on, right? It does not matter to them, right? So close supervision of employees by management to ensure adherence to plan. Yeah, so you had to monitor them closely to make sure they're doing what you say, right? So one of the advantages is that it is a relatively quick process due to feedback or input, right? You had to worry about what anybody cares, what anybody's saying, or any other considerations. You know best, do this, right? Which is how I try to parent sometimes, which I'm fast learning is not necessarily the optimal way in every situation. So yes, it is very much a learning process, right? A disadvantage that your plans might be unrealistic, right? Due to management being out of touch with reality, right? The kind of weird thing, maybe weird is the wrong word, is sometimes though when these things are imposed and they are very well informed and people they're given what you call stretch goals, right? So they're not unrealistic, right? Some people think they are unrealistic, and there's a saying I like that says the person who thinks it can't be done should get out of the way of the person doing it, right? And the funny part about even though I have these feelings about the CAPE accounting syllabuses, there are people who do the exams and get these very high grades and get these awards and president's medals and scholarships and these things, you know. So it says, hey, there's some way to do it, and interestingly enough, they also sometimes perform very well in the other subjects, right? They mightn't make the merit list in every single one, but they do pretty well, you know. So maybe I have to reconsider my opinions in light of other information. So I'm looking for that other information. As Tom also says, you gotta look for disconfirming evidence. Don't always believe your own thoughts about everything. All right. Now, of course, the opposite one is the bottom up, right? Bottom up approach, right? Consultative approach or democratic. Right. So in this approach, as the name implies, management consults, right, with workers in order to develop a budget workers and their input in mind. So the advantage here is that the plans might be more realistic and achievable due to employees' input. Of course, the disadvantage here, one of the disadvantages, is that it can take a lot of time to do this and can result in unnecessary conflict. Of course, you have option 3, which is a combination of both methods, right? So you can kind of how to do this work. Which work is that by Aaron? Yeah. So I mean, some of you all, like I said, probably have done maybe O-level PUB, O-level econ. So you might also know about different economic systems. So you know about the free market economy. You also know about the planned economy, and we know that those are basically conceptual extremes, right? They don't, most times they don't actually exist in reality. What exists is a mixed economy, right? So I don't think either visa. I mean, don't get me wrong. I do think that there are some instances where top down or autocratic is right. It is the pure form or purest form, and very little, if any, feedback goes up. Right, it just comes down. Right. I think the bottom up approach is also implemented, but again, management can't listen to every single person all the time. Right. You have to just. You will never have perfect or complete information, and if you take the time to do that, by that time the market and situations probably have changed and your information might probably be stale anyway you take it, right? When I was working in the company I was working at before this, it was a finance company, and I took real long to get my work done because honestly I had no clue what I was doing, even though I felt like I was smart. And that burst my bubble again. Thankfully so, because it reminded me, I have a lot to learn. And I think I was resistant in that particular step. Anyhow, and yeah, by the time I got information about certain things, and I sent it to the boss. He's like, Chris, you're going to these figures again, boy. They change. I'm like, oh. I was like, okay, well, how do I know when I change it again, they're going to change again? So that was just annoying. But anyhow, yeah. So that's the bulk of the notes for today. Yeah, okay. So we got done with it by about 10:30. So ladies and gents, can you guys just give me a quick G in the chat if you're good with that? Please and thanks. If you have any questions, anything to add, that's not a problem. I'm quite open to any feedback. I very much want your feedback, to be honest. Because as I'll give you a little anecdote from this week. There's been a student in my class, in my Form 5 POA class, who's only come online because she lives in the East, right? Her attendance has been spotty, but what happened last year? Her brother, who was just 21, passed away, and I know that she was having a bit of a hard time, so I didn't report on her too often or whatever the case is, right? But her mom, I called her mom this week regarding fees and things, and the mom was like, I came home Wednesday and she wasn't online, and I asked her what's going on. She said she hasn't been understanding for a long time now. I'm like, okay, but if that's the case, you had to tell me something so I could try and figure out what to do, So, and the funny part is I'm reading a book now called Buy Back Your Time by a guy called Dan Martell, and the chapter I'm on is he says, without this F word, your business will fail, and the F word is feedback. You really need to know. You have to have that dialogue, communication. Okay, thanks everybody. All right, so we're going on to our next page now, and we're going to talk now about the production. But now I have some stuff kind of in place here, right? But okay. So we talked about what a budget is. It's a plan for the use of resources, and also a plan about how to go about achieving your goals. All right. Or it can be used to help with that particular plan, right? And when we talk about production, we're talking about the creation of units of output. All right. So with a production budget now, we are budgeting our production. We are budgeting the creation. What resources do we need, right? But more specifically, how many units do we need to make, right? So we have some inputs. We have some pieces of information we need to know, right? What is demand? How much are we going to sell? So for example, if I say, look, we jumping into this market, we had to sell 10,000 units this month. So, okay, so how many units we need to have on hand? 10,000, right? There's no rocket science. You want to sell 10,000, you need at least 10,000 on hand to be able to sell. Okay, cool. Then somebody come from the bank and say, hey, I have a box here with 1,000 units. Say, oh, we have 1,000 already? Well, that's great. So now we only have to produce 9. So that box with the 1,000 we had was basically like your opening stock or your inventory at start, right? That item there. So now, if you think about it, the number to produce would be the number you have to sell minus if you have any opening stock. All right, cool. And then they say, well, hold on. Don't forget, we need to have some stock left over for next month, right? Because we don't know if, suppliers will deliver stuff on time for us to produce. I say, okay, all right. So how much you want to have on hand for next month? 2,000. Okay, well, we got to make that, right? So we started off having to make 10. We found a box with 1,000 units, which is opening stock. So you minus that. 10 minus 1 is 9. Okay. And now all of a sudden you want an extra 2 to hold on hand for next month. Okay, so we're going to make that. So 9 plus 2 is 11. And that's it. That's the production budget, right? I mean, you could rearrange where you put stuff. It's just addition and subtraction, right? I mean, it's basic arithmetic. right? And as you should know, if you remember, BOMDAS or PEMDAS, as the Americans call it, right? Addition and subtraction are of the same level, the same rank in terms of order of operation. You just do whichever one appears first, right? And you can shift it around, right? Okay, so this budget, right, shows us how many units the entity needs to make. I shift it across a little bit. Sorry, something very weird there. Right, needs to make on a monthly basis, keeping with certain parameters, such as minimum stock levels. Sorry, minimum closing stock levels. Hold on. Required sales levels, sales volume, right? Volume in the number of units, right? Right. The format here for this budget is derived from a permutation, which simply means a rearrangement of the cost of goods sold format from the trading account, right? So that is the truth. It is derived from that kind of rearrangement. Oops, sorry. What did I do? We have to put a line back then. Right. So parameters, my bad. Whoa, what went on there? Okay. So your cost of goods sold, as you know, is opening stock plus purchases, which gives us cost of goods available for sale. And then you minus your closing stock for that. So now I'm just going to kind of explain, right? Now, I know I just kind of explained it, and it actually turned out to be an easier explanation than what I'm about to do. So I'm actually just now reconsidering if I should even bother to explain in the conventional way. um, yeah, I feel like I want to scrap what I have there and just kind of do the example. Even all of this stuff here too, because like I said, what I just explained kind of makes a little more sense and is a little better in terms of the efficiency. One second. Right. Okay. So I guess in the context of what I just said in terms of the format for the budget is derived from a permutation of the cost of goods sold format. I'll just kind of explain it real quick, right? So, all right. So I am going to change my notes here, right? So if we, right, and I should actually going to put production, right? Because as we know, if we are a manufacturing entity, we are not purchasing finished goods. We are producing the finished goods, right? We will purchase the raw materials, which is actually the other budget that I have planned for today. All right. Okay. Cool. So with the cost of goods sold, you have opening stock or inventory at start if you prefer that, plus the number of units you have to produce, right? So when you add these two things here, you get the total number of units available, right? And then when you subtract what you have to leave back, you'll find out how many you were able to sell. Now, again, let me kind of explain it a bit differently, right? So I'm going to use O at O. Oh, what's going on? Book, right? Okay. Right. I don't. Right. Okay. All right. So check this, right? So the way I just explained it is as follows, right? if we know that we have a required sales volume, right? And our required sales volume is equal to, let's say, let's use a slightly bigger number, right? Let's say it was 5,000 units. No, I used 10,000 just now, right? Okay, let's go back to that, right? 5,000. Let's keep it simple, 5,000 units, right? And we said, okay, look, if that's all the information we have, then we have to make 5,000 units, right? But then you say, okay, wait, hold on, just a second. We actually found this box here, and this box has 1,000 units. So say, okay, cool. Well, that box is like our opening stock, right? Opening stock. The opening stock. So we said 1,000, right? Okay. Right. So based on the above, sorry, give me a sec. So scenario 1, right? Sales only. Right. So if your required sales volume is 5,000 units and you have no information about opening or closing stocks, therefore, the required production volume would be equal to 5,000 units, right? Right, and that's it, right? If we know we have to produce 5,000 units, right, and we have no opening and closing stock, then you gotta make 5,000. Simple as that. Cool. Right. So scenario 2, right? Sales and opening stock. Cool. So if we know so required sorry. So I got a grade 2 because I didn't finish question. We should repeat. Yeah, if you're able to. If not, just go ahead, choose your path and go forward. Right? Depends on what you want to do, right? Yeah. So required sales volume again. So let's say 5,000 units, right? And let's say we had an opening stock of 1,000 units, right? So if you already had 1,000 units, right, and you wanted to sell 5, and you had no requirement for closing stock, it means, well, hey, what if I already have 1,000? I just have to make 4,000 more, right? So required, right? Required production volume. Yeah. Therefore, 4,000 units, right? Means that, right? So production is equal to sales minus opening stock. Have enough room? Let's see. Yeah. I find in the middle, this is kind of have it look kind of odd. It does stand out. Right. So scenario 3, you have sales and closing stock. Right. So let's say the required sales volume again is 5,000 units, right? And let's say the closing stock we require for next period to start next period, right, is 2,000 units, right? So if we have to sell 5 and have to keep 2,000 for next month or whatever the case is, we have to therefore produce 7,000, right? So required production 7,000. Wait, I think I forgot to do something real quick. Right, so I kind of making it look like we have a kind of addition, subtraction. 5 plus 2 is equal to 7. Right. So production is equal to sales plus closing stock. And then scenario 4, sales, closing stock, and so required sales volume is 5,000 units, right? We have to also have a closing stock next period of same 2,000 units, right? So we therefore have to have what you call it. So units to be made available. What about this total required? 7,000, right? And if we have an opening stock, well, we know what we do with that. But hey, we have opening stock of, let's say, 1,000 units, right? So we do have to make that. So therefore, if we need 7 and we already have 1, we only need 6. Production. Right. Right. So production is equal to sales plus the closing stock minus the opening stock. Right. You could minus the opening stock before adding the closing stock. It does not matter. Right. You should not lose marks for that. That's ridiculous to do that. Right. But yeah, that's basically it. That's the format for the production budget. Okay, so ladies and gents, can I just get a G if you guys were good with how this progressed, right? And the final line down here. If you need me to re-explain, it's not a problem. If you have any particular scenario that doesn't make sense, scenario 1, 2, 3, or 4, or any combination thereof, let me know, right? I understand that these things could be a bit difficult for some people to wrap their minds around. It was a little difficult for me too, right? But with time, if you put time and energy into getting better, you will get better, right? But sometimes you might need a slightly different phrasing, different explanation, whatever the case is, in order to be able to make that little jump, right? And don't be embarrassed or ashamed about that. You need what you need, right? That's your business, right? All right, cool. All right. And again, if anybody else has any questions they don't want to ask here, you could always just WhatsApp me. No problem. Or WhatsApp working a little better now. I think most of my messages are coming through and popping up and then so whatever it was resolved itself. Okay, so folks, going to the next page. All right. All right, so I'm gonna zoom in here. All right. So I took this particular question from my old UE text, right? Again, I don't know that it's in print anymore, but let's just take a read, right? So Pine Decorations anticipates January sales of 50,000 units and sales increases of 10% in each of the next 3 months, right? So they already start with a little change, right? 10%. Right? The company wants to maintain its finished goods inventory of 20% of the following month's sales. Oh, okay. Oh, no, it did. Right. The following month's sales, right? No, why? Yeah. Right, so the finished goods inventory. Right, cool. Nice. Right. Assuming that there are 9,000 completed units on hand January 1st, prepare a production budget for January through March. Okay. Now, let's just read it over and kind of unpack what they're telling us here, right? And as a matter of fact, let me just I think 2 lines is sufficient. See that line there. I like the little. Anyhow, right. So we need a production budget. So what is the budget supposed to tell us? How many units the company needs to produce every month? When do they want it for? January, February, and March. So they had up Pine Decorations production budget for the months of January to March 2022. Let's call it 2025, right? We're in 2025 now. Okay, so 1 column for Jan, 1 column for Feb, 1 column for March, and you are using units, right? Units of output. Okay, cool. Now, according to our formula, we have to take the sales, add the closing stock, and then minus the opening stock, all right? So sales. So Pine Decorations anticipates January sales of 50,000 units. 50,000 units. And sales increases of 10% in each of the next 3 months. Okay, so February sales will be 10% more than January, right? So you could find 10% of January. 10% of 50,000 is 5,000, and you add it on. 50 and 5 is 55. Another way you could do it, you could take that and you can multiply by 1.1. The 0.1 being the 10% increase, right? So 1.1 gives us 110%, right? And now in March, if March will also have an increase, the sales in March will be 10% greater than the sales in February. So you had to find 10% of 55,000 now, which is 5,500, and add it on. So again, you could find, so 5,500 added on to 55,000 is 60,005. Or again, you could just multiply this by 1.1 and you get 60,005. All right, cool. Now we have to add the closing stock or closing inventory, right? I usually tell people to use whatever term the question uses, but it shouldn't penalize if you're using stock if the question is inventory or goods or whatever, right? Closing inventory, right? Now, closing inventory, so the company wants to maintain its finished goods inventory at 20% of the following month. Sorry, what? How I got 60,005 for March? Okay, so the question says, back to the first line. So January sales is 50 and sales increases of 10% in each of the next 3 months, right? So for January to February, if I took 50,000 and I found 10%, right? That would give me 5. And then what I'll do is I'll take that 5 and add it to the 50 and get 55. Okay, so my head blocking, sorry. Let me shift it up a little bit. Right, so this is Jan to Feb, right? Now for Feb to March, are we seeing? Yeah, okay. February sales is 55, right? Now, again, we're going to find 10% of that, which is 5,500, and I'm going to add it to the 55,000, and that's going to give me 60,005. Does that help? All right, cool, no problem. Right, now closing inventory. Company wants to maintain finished goods inventory at 20% of the following month sales. 20% of the following month sales. So for January's closing stock, they want it to be 20% of the following month's sales. So the closing stock for January is 20% of February's sales. Right? For February, the closing stock should be 20% of the following month's sales. The month following February is March. The sales in March is 60,005. So the closing stock in February is 20% of March's sales. Now for March, ooh, interesting. Look what's happening here. For March, the closing inventory for any month is 20% of the following month's sales. The month following March is April. And we need to find 20% of April sales. Now, the question did say back in the first line, sales increases of 10% per month for the next 3 months. So January has a sales of 50. The next 3 months are February, March, April. So in April, we're also going to have a 10% increase from the previous month sales, right? So again, if you want to see that across here, so not February, so March to April. Month full of yourself, right? So we're gonna take the 65. We're gonna find 10% of that and then add it to 65. So 66,550, right? Right. And then we have to find 20% of that to put here. Right now, you wouldn't really actually show this in the question because they didn't ask for it, but I'm showing it for the purpose of illustration. All right. Okay, cool. So before I go on to the next part, now the next part, I'm just going to be adding up these three figures. Sorry, yeah, adding up those things, right? And this is the units available for sale, right? Okay. So 50 plus 11 is 61. 55 plus 12, 1 is 67, 1. 65 plus 13, 310 is 73, 810. All right. If you are good with sales and the closing stock calculations, give me a quick G. If you need me to re-explain anything, everything, give me a R, but be specific about what you'd like me to re-explain so I can be pointed. If it's everything, okay, cool, then that is general, so I will try to abide by it as best I can. That's 9 out of 13, so that's 4 people. All right, so it's like a 2-to-1 ratio there. All right, right. So the sales increased by 10% per month. So 50,000 in January. 10% on top of that is 55. 10% on top of that is 65. And then we did April because we need April to figure out March's closing stock, right? Now, technically, you don't. Technically, you could do the following, right? Because all you had to do is find, what you call it, 20%, right? If you put your percentage, yeah, hold on, there, and then just multiplied, right? Yeah, you could have done the calculation. If you know how, but again, if you're now starting budgeting or you did it and it's still rusty, you need some time to get into the nitty-gritty of the workings, right? And especially if you're not too confident in your calculations and the maths, I could understand that, right? So take your time, make it make sense to you, ask your questions. Like the question was asked just now, which I don't mind at all, right? I'm grateful for the questions. All right, cool. Now, all we have to do here is minus the opening inventory. Now, in January, assuming that there are 9,000 completed units on hand January 1st. So in January, we have 9,000 for opening stock, right? So when you subtract 9 from 61, you get 52. Right? And that is the production volume or required. How did I get in March? As in the sales in March? Sorry? Right? I found, so see, look here, February to March, right? In February, the sales were 55,000. And to get March's sales, I have to increase it by 10% because that's what the question said. Sales increases of 10%, right? So if February, I had 55,000 in sales and March has to be 10% more, right? See, I find 10% of 55,000, I get 5,500. Oh, am I blocking anything there? I'm kind of blocking. Anyhow, right? And then I add it on. So 55,000, sorry, plus 5,500 gives me 60,500. So that's how I got the sales for March. Right, okay, cool. Now, in February, the opening stock of any given month, generally speaking, by the way, is the closing stock of the previous month. So the closing stock for Jan becomes the opening stock for Feb. Right? Sorry, I need to put a minus. Yeah. So the closing stock for January becomes the opening stock for February. 67 minus 11 is 56. And then for March, the closing stock for February becomes the opening stock for March. 73,810 minus 12 is 61,710. And that's it. Okay, so that is your production budget. The stuff across here was just explicit working that you don't have to write or take down, which you could if you want, but it does not form part of what you present in your solution, right? As in any body of the working. You can present it elsewhere, and say, hey, this is how I got those things. All right. Okay, cool. So as you can see, right, we have some percentage increases to make use of. We also have the added challenge of being able to interpret what they tell us, right? Like here, the sales increases of 10% over each of the next 3 months. So from January, sales increased by 10% to February, and then again to March. Now, what some people do is the 10% of January, 5,000, they keep adding that 5,000 every time. But that's not what the question said, right? It's 10% increase per month. So it's 10% of January is added on to get February. 10% of February is added on to get March. 10% of March is added on to get April, right? And you can see those workings a bit more explicitly across here, right? Right? And then to get the closing stock, right? It says the company wants to maintain its finished goods inventory at 20% of the following month's sales. So the closing stock in January is 20% of February sales. 20% of 55 is 11. The closing stock for February is 20% of March's sales. So 20% of 65 is 12.1. The closing stock for March is 20% of April sales. Now, we didn't have to go and find out April sales, which is 10% more than March's sales, right? That's here, March to April, 68,005 plus 10%. Well, sorry, 10% of it is 6,050. And when you add it together, you get those figures there, right? And then, right, and then to find the closing stock is just 20% of each of these figures. Put that there, right? We add going down to get the units available for sale, right? And again, this is in units. This is not in dollars. This is in units, right? So you can put sales volume if you want, right? But because the heading is in units, it should be self-explanatory, right? Okay, cool. You can even just put production here, by the way, right? Or units to be produced or required production. There's no one right label for it, right? Don't let anybody try to tell you and bully you into using one label. If your teacher wants something in school, then by all means give that to them, right? If you understand why. Anyhow, right, and then the opening inventory. So usually for the first month, it's given to you. Sometimes, however, it can be a percentage of the current month's sales or the previous month's sales. It will vary based on the question. But the most popular thing for the closing stock for the first month, sorry, the opening stock for the first month is that it is given, right? So that's the 9, right? 61 minus 52. Then the opening inventory for February is January's closing stock, right? And the opening inventory for March is the closing stock for February. Cool. So that's the example. So I'm going to give you guys one to try now. So what I want to do, I'll send a picture of this in the chat in case anybody didn't get a chance to copy the whole thing down, right? Or in case you just want to be able to refer to it. Okay, cool. Okay, wait. So sorry, I have to ask you all. So Google Meet, ladies and gents, if you guys are good with the production budget as presented, just kind of give me a G in the chat. If you need me to re-explain any particular aspect, please give me an R and let me know what that aspect or what that aspect is or what those aspects are. Right? Make sure ask your question, make sure you get answered. Clear satisfaction. That's half of all you. 6 out of 12 people. Wow, okay. Anyhow, okay. So I'm going to put up a question on the screen now. We're going to take a little read through it. And hold on. Oh, yeah, no, that's the one. Yeah. Okay, cool. Yeah, so I'm going to go on to the next page, right? Classwork question. All right. So Mason Incorporated. Now, this question actually covers both a production budget and a materials purchases budget, right? Now, we only going to be interested in the production budget. All right. So, all right. So Mason manufactures and distributes parts for lawnmowers. the company's main product, bilateral assembly requires 5 units of material at a cost of 60 cents. Okay. Company, right, must maintain a direct materials inventory 70. Okay, cool. So here what? Ignore that whole first paragraph. Right. So we here. We just focusing on this piece here, right? So sales projections in the last in units for the last 6 months of, well, there was 19x6, so we could do 20x6, right? Or 21x, whatever. So July, August, September, October. So here they gave us the sales volume in units, right? So we didn't have to calculate that. So that's one less thing for us to do. Sorry. Management wishes to carry a finished goods inventory equal to 40% of the following month's sales. Right. Okay. So this item here is your closing stock. Is there a way? No. Right. Following. Right. So that's your closing inventory. So your closing inventory is 40% of the following month's sales. And here we don't have to worry, right, about calculating sales. Now, hold on 1 second. Yeah. On June 30th, finished goods inventory totaled 3,200 units. All right. And don't worry about this piece in the green. I kind of crossed out for now. So they want a production budget. Right. So for the production budget, it's sales plus closing stock minus opening stock. All right. So we have the sales. Now, and they want it for July through September. So that's only 3 months there. So it's not July to December. It's July, August, and September. Right? So we have all the sales we need. Closing stock. So that's the red. We need to find 40% of the following month's sales. So the closing stock for July is 40% of August sales. We have August sales. The closing stock for for August is 40% of September sales. We have September sales. And the closing stock for September is 40% of October. We have October. All right. Smiley, this is Cape Accounting Unit 2 and specifically budgeting, production budgets. Right. Right. So we have the information that we need to calculate closing stock and opening stock. Right. So we're doing the budget for July, August, and September. And here on the 30th of June, the end of June, the closing stock for June is 3,200. And the closing stock for June is the opening stock for July. All right. Okay. So what I want you to do, right? So once again, you could use your example, right? So it's sales plus the closing stock minus the opening stock. All right. So you have your sales. We know how to calculate closing stock, and we have the opening stocks, right? So the opening stock for July is the 3,200. Opening stock for August is the July's closing stock. Opening stock for September is August closing stock. All right. Okay. So I'll give you about 7 to 10 minutes. That seems like enough. All right. So organize that. And then we'll correct and move on. Now, of course, if you're having any trouble, it's not a problem. Let me know. Natural lipstick. Yeah, guys, I have a lot of water bottles here. I'm just going to throw them in the bin while you guys are doing that. Now, if you have any questions, let me know. Right, my trash is not more important than answering your questions. I just want to have a place to clean. Right now, it's not. After about that, you know, Well. Oh, Julia. Okay, cool. Hey, Julia, you're back. You're back in? No, not back in. Oh, that's what I clicked. Right, I meant. Julia, sorry about that. No props. Oh, okay. Interesting. Sapphire, twin. Cool. So, can I zoom out? Like 150 without it seeming too small. Okay. Hold on, just now. I need to just format something here real quick. Give me 1 second. This is who? Mason Incorporated. Okay, cool. The production budget. What was that laugh? Oh my god. Yeah, production budget for July, September. Right, so July, August, September. Oh, right, so we know we need sales at the closing stock. Let's see. Right now, you can actually exclude the units available line, right, and just go straight sales plus closing stock minus opening stock. You could do that, right? There's nothing that says you can't, right? But just for the sake of in keeping with what I gave you all, right? So units available, less the opening stock, and that's the production. Okay, cool. So the sales, so we have 9,000, 12,000, 60,000. Oh, okay, great. Just now, 1 second. Right. The closing stock is 40% of the following month's sales. Right, cool. This is 0.4 by this, right? And then we need, oh, right. And then we need 0.4 by this one. We don't have that, right? So you could put it in. What I will do is I will disappear it. And we can add those together, put a little line on top. Now the opening stocks, right? So for the opening stock for July, that is the June item here, the 3,200, right? The opening stock for August is July's closing stock, and the opening stock for September is August's closing stock, right? That. So I just bold and highlight for it to stand out a bit more so you guys can see it a bit more easily. Right? So what I wanted to do. Okay. All right, ladies and gents in the chat, if you guys are good with that, just kind of give me a quick G in the chat. If you need me to re-explain anything, give me an R. Please and thanks. If you need more time next time, you can let me know. Yeah, don't be afraid to send your pics of your work to me, especially if you are having trouble or issues. That's when you need the help the most. Okay, don't be afraid. Right, this topic can be a bit difficult. All right. 1, 2, 3, 4, 12 people. That's half of all here. 7. All right, cool. Hold on. Sorry. 8. Okay, I have 8 now. Okay, so 8 a little better. 8 out of 12. All right, the next 4. Let me know now. Give me some kind of feedback. All right, if you need help, let me know. Like I said, it's just like that. A couple of people, right, who just all of a sudden say the online not working for them. Like, okay, well, you're doing this like where we at now? We're basically the end of March. 7 months now, and all of a sudden it's not working for you. But obviously something had a anyhow different story, right? Right. Okay. Oh shucks, I was supposed to All right. You know what? It don't make sense deleting it and then typing it over. We'll just talk through it, right? Okay. The next budget that we're going to talk about is the purchases budget or the direct materials purchases budget. Now, for all intents and purposes, it is exactly the same as the production budget, right? Because remember, like we said, if we go back to this page here, right? The cost of goods sold section is opening stock. Hold on. I need to just shift around some stuff. Sorry, give me a sec. What is going on? Right. Right. So opening stock, right? So again, production is the number of units and purchases is if it's materials, right? So we need to know how many units of materials are required to be purchased. And we could show the value, the dollar value, right? So this could be done in units, and then the final line could be changed to dollars by a simple multiplication by the price, or you could work in dollars right through. Now that one is not the usual. It's usually that we have the units. All right. Okay. And as you can see here, right? So the format for this budget is very similar to the production budget, but has a couple extra lines on top that are used to determine the number of units of materials, and a couple lines at the bottom if we are required to show the dollar value, right? So basically, we're going to take this same format here, and we're going to have long story short, this line, this bottom line here from the production budget is basically going to be or can be the top line of our purchases budget. And I'll tell you why, because I'm actually going to use, hold on, this same question. No, I'm using Manchester. No, I'm not using Manchester. I actually want to use Mason. This same question, right? Right. So, sorry, give me one sec. I'm going to copy and paste this one across here. I forgot something. Right, so I'm going to use Mason as the example, right? So I'm going to go back here, and we're going to go back up to the top line now. Firm must maintain. Okay. All right. So let's just kind of refamiliarize ourselves with the question, right? And it's really only this top section here we're actually interested in, right? The bottom. Oh, sorry. And then this last one down here. Okay, cool. So I have a red because I want to talk about the colors. I have a red here. Can I change that to a different color? Boy, I wonder. Give me one second. Let me see. Ooh. All right. Okay, I have an idea. Where? Okay, so maybe that's a little too thick. Go down a little bit. Yeah, all right, cool. Ah, lovely. These are going to take out. Right. Okay. So same company, Mason, right? So Mason Incorporated manufactures and distributes various parts for lawnmowers. Okay, cool. Sorry, one sec. Yeah, cool. The company's main product, a bilateral assembly, requires 5 units of materials at a cost of 60 cents per unit. Now, that's the material, right? The bilateral assembly, right? Okay. To keep production moving smoothly, the firm must maintain a direct materials inventory equal to 70% of the following month's production needs. And down the bottom in the green, 30,000 units of materials were in the warehouse on June 30th. So they want us to do a materials purchases budget for July through September. Okay, cool, no problem. Right? So what we're going to do is we are going to okay. Okay, cool. Right, sorry. My bad. Right. So on the top here now, right. So once again, let's just recap what we do. So what, sorry, sir, can you send the purchases budget note in the, oh, sorry. Yes, Tony, I can do that. Good looking small, but don't worry. I'll sort you out. Compilation of past paper questions that has budgeting. I believe I do. Put you as unread, so I'll check your message back. So when I put you guys to work something, I'll see if I have that PDF. I should have it, yeah? Right, there you go, Tony. Right. Okay, so the materials purchases budget is done so that we know how many units of materials to purchase. The format or layout is practically identical to the production budget, right? So we need, instead of sales, we have production, which is why I said this could be the top line, but we have to convert it. So this is in finished units, right? And it says here in yellow, right? Each assembly, each finished unit requires 5 units of direct material, right? So the first thing is that we have to convert finished units to materials, right? So production in finished units, sorry, for July, August, September, right? So this is basically equal to this, right? What we have to do is we have to multiply by the materials required per unit, right? Which is 5. 5, 5, 5. All we have to do now is multiply going down. Right? So this is the materials required for production. Right? So again, this top line for the materials purchases budget takes the production requirements from the production budget, which we did previously, right? So this is the last line here, right? So it takes this last line we did here, the production in finished units, and it converts it from finished units, right, to materials, units of materials, by multiplying by the quantity of materials required per finished unit. Right, so for 10,600 finished units, we had to multiply, and again, we got the information here from the question in yellow. Each unit, right, each bilateral assembly requires 5 units of materials, right? So each unit, each finished unit requires 5 units of materials. So 10,006 by 5 is 53,000. 13,006 by 5 is 68,000. 18,004 by 5 is 92. Right. From there now, right, we are going to add the closing inventory. That's going to give us the materials required to be available, and then less the opening inventory. That's going to give us the materials we purchase. Right, so here is basically what we just did in the production budget, right? You have your quote unquote production. Yeah. Okay, cool. But you're okay with the stuff we did so far? All right, cool. All right, lovely. I'm glad to hear that. So when you get a chance, just watch your last half hour and you should be good to go. All right? Okay, bye. Right, so materials required. Right, so the closing inventory, that's the part in the blue. To keep production moving smoothly, the firm must maintain a direct materials inventory equal to 70% of the following month's production needs. Okay, so for July, the closing inventory is 70%. 1 second, sorry. 70% of August production needs. The closing inventory of any given month is 70% of the following month's production needs. And we're talking about the materials, Materials. Right. Same thing for August. August's closing inventory is 70% of September's production needs. Now for September, we need October's production needs. Right? Now for October, hold on, did we not? Oh, I didn't copy. Hold on. What was October? 22? Okay, cool. So October was 22. Right, okay. Oh. Oh, whoa. Whoa, donkey. Right. Okay, so we had to backtrack a little bit here. When I say backtrack, we need October's production needs, right? To get October's production needs, we have to do the column for October. Right? Right. But to find production for October, we need to have is 40%, right? 40% of November's closing stock. Sorry, November sales. Sorry, I said the wrong thing. So November. Right, so we need 40% of 29. That's going to give us 11.6. We got to add that to 22, that's 33.6. And then the closing stock for, sorry, the opening stock for October is September's closing stock. That's 8,800 here, and you subtract, like a 24.8. So we had to do the extra month in order to be able to do this, right? By 5 is this. And we need to do all that in order just to get the closing inventory here, which is 70% of that, right? So yeah, like I was saying, budgeting could throw you a couple of curveballs here and there, all right? So you just have to be prepared for them, and that's why we're doing this. I'm trying to prepare you for it. But of course, the to me, the most impactful preparation is the one you do yourself, because you'll be able to do a lot more work on your own usually. And again, that could differ based on circumstances. Right, okay, so once again, the production here was taken from the production budget. Boom. Right? Multiply, and as finished units, you multiply by the number of units of material required for each finished unit, and we get the materials required for production. We add in the closing inventory. The closing inventory is 70% of the following month's production needs. So the closing inventory for July is 70% of August's production needs. Closing inventory for August is 70% of September's production needs. And the closing inventory for September is 70% of October's production needs. So we had to go back up and do a column for October, which required information for November. Fun times. right? Okay, but this is all we need for October. So we could grade out, right? We grade out here too. Grade out too. Right, sorry. Okay, right. So materials required to be available. Right, so you have to add, sorry, that's definitely the right thing. 53 and 47, 6 is 100,600, right? 68 and 64, 132, 4, 92 and 86 is 178. Right, less opening inventory. Right, so up, Beavis. Right. Right, so 30th of June, so the end of June, we had 30,000 units of materials available. Inventory at the end of June becomes the opening inventory for the start of July. Right, so minus 30. Nice. Now, for August, we take July's closing stock for August's opening stock. And then for September, September's opening stock is August's closing stock. Now, we're not done. But I'll pause here for a second. Right? So as you can see, if you focus kind of on here, you have your production requirements plus the opening inventory. Restart. You have your production requirements plus your closing inventory. That's the total number of units you need. And they subtract your opening, and that's going to give you how much you have to buy. Now, back up in the yellow here, each unit of material costs 60 cents. Now, guess what we're doing? Multiply by the cost per unit of materials. So that's 60 cents, right? This is the purchases figure. Right? Now you will not always get to do these last two lines because they will not always give you the cost per unit. Sometimes all you get to do is the middle five. Right? So let me maximize this now. Hold on. Okay. Send it over again as in the picture, the whole picture. Right? And now we're going to go back to the solution and send that as well. Right. So as you can see, it starts to get a little more complicated. Well, I mean, I don't know if complicated is the right word. It starts to get a little more involved with the number of lines of working. But if you look at what those things actually are, it's just some simple multiplication. So it should not be overly taxing, all right? But I understand that it can seem that way, especially at the outset, all right? Okay. Can I re-explain the calculations for September? Sure. Okay. So for September, right, so the production, so again, this 18.4 is what I bring down from here, 18.4, right? I need 5 units of materials for each finished unit, for each completed unit. So I multiply the number of finished units by the number of materials, the number of units of materials that I need for each one of these, and I get this. So the 92,000 is the number of units required, the number of units of the materials required for my production needs. Okay. Now I need closing inventory, and the closing inventory is 70% of the following month's production needs, right? So I need to find 70% of October's production needs. Now, I didn't initially have October because the production budget was just for July, August, and September. But because for September, for the materials purchases, I need this information, which is the closing inventory for September, right? I need to know, which is 70% of October's, 70% of October's production needs. I need to do October's column in the production budget. So I jump back up here now. So the production budget, right? So for the sales for October, 22,000, right? Cool. So I put 20,000. Now, for the production budget, it's the sales plus the closing stock minus the opening. But the closing stock in October is 40% of the closing stock of the sales in November, right? So I had to plug in the November information here to be able to find 40% for the closing stock for October. And I added these two to get the units available, and I minus the opening stock, which was for October, which was the closing stock for September. So the 36 minus the 8,800 is 24,800. Cool. Now from there, I put the 24,800 down here, multiply by the five units of materials per unit of finished output, and I get 124,000 units of materials needed. And for that, all I'm doing with that is finding 70% of that. Right. So let me know if that helps at least a little bit now. If there's anything else you need to clarify or re-explain, let me know. Cool, thank you. All right, okay, ladies and gents. I want to give you all one to try, but I'm trying to decide if to give you all Manchester or Lambeth. Okay. So Manchester produces hand-sewn soccer balls that require 12 panels per ball. So each ball is the finished unit, and the leather panels are the raw materials. And we need 12 units, 12 leather panels per ball. Okay. Manufacturing volume will increase throughout the year to meet rapidly rising demand and is expected to be as follows. First quarter, 8,000 balls. Second quarter, 11,000 balls. Third quarter, 15,000 balls. And fourth quarter, 20,000 balls. Right. Okay. These are, so we didn't have to do a production budget. They gave us the sales, right? Sorry, that's manufacturing. Manufacturing volume. Sorry. So these figures, 8,000, 11,000, 15, and 12, and 20,000, sorry, those are the as production, right? The company wants to stock enough panels to meet 30% of the following quarter's needs. Okay, so that's the closing stock, right? Closing stock is 30% of the following quarter's needs. Each panel costs 70 cents, and there are 3,100 panels in stock on the 1st of January. Prepare a direct material purchases budget for the first. Okay, so this here actually gives us a little bit of a little scale down because we didn't have to do the production budget first. So we know what the production, so we're going to start production. We're going to multiply by 12, right? So production, so units, right? Or manufacturing volume. Right, multiply by 12, giving us the units, materials required for production. And then from there, you add your closing stock minus your opening. You'll get the number of units, the number of panels to be purchased in each quarter, and then you multiply that by 70 cents, right? And it's only the first 3 quarters, so it's only for Jan, Feb, March is quarter 1, April, May, June is quarter 2, and July, August, September is quarter 3. So we're not doing a column for 4th quarter, but we are going to need that information. Okay, all right. So Q1, Q2, and Q3. All right, so cool. So I'll give you about 7 to 10 minutes for that. Yes, we might not be able to get to Lambeth, but what I'll do is I'll let you guys try Lambeth on your own, and I'll send the solution. Put in the first couple lines, right? There we go. Well, oh yeah. Oh, I thought it was a Dominican grill. Right. All right. So we need 30% of next. No. Right, so the opening stock is 3,100. Opening stock for, what you call it, Q2 is closing stock from Q1. And yeah, this closing stock is this opening stock here. Right, so this is materials to be purchased. Units. Each panel costs 70 cents. So I'm going to multiply that by the cost per unit. Oh, I was pressing the wrong button. Where we had, right, and this is the, oh, hold on, sorry. Cost of materials to be purchased. Cool. Right. So if you guys are good with that solutions, kind of give me a quick Genie chat, please and thanks. If you need me to re-explain any particular aspect, then by all means, give me an R. Let's check on a solution here. Right, by 12 first, right, 96, 132, right, good, 396. 396, 135, 6, right, 252, 100, that, right. Right. Yeah, I see, I have a 750 here, I see you have a 400. So just double check that now. Wait, hold on. Oh no, I'm watching Mason, yes? Good, yeah. 750, right, that's, yeah, okay, cool. All right, so now let's see. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. All right, so 9 out of 10. Not bad. Okay, so some people jump out. All right. Okay, so folks, that was day one of budgeting. Right. So I didn't mind hitting the reset. Like I said, we saved the day on CVP, break even analysis. So that was cool. Right. I'll just put you on notice on the 5th. I may have to send you a pre-recorded class because which is actually going to be day 3 of budgeting, interestingly enough. But Stepson is at work us on that morning. I'm gonna see how best I could probably try to negotiate, not to have to go to it. Yeah, I'm gonna try because I don't want to miss any more classes. We're too close to the exam now to be missing any kind of days, and to run the risk of the replay not being good enough. Right. Anyhow, I am gonna send you guys this question here. Lambeth is actually a past paper question. I'm guessing it's either 2018 or 2019, right? So I'd like you all to do Lambeth, and you can. I will send the solution for Lambeth. Right? I'll actually send the question as part of the PDF. So I'm going to send everything we did today as a PDF. All right. Okay. So, folks, if anybody has any questions and they get to ask during class, please feel free to hit me up. Again, my time these days is real sketchy. If that's the correct application of the word, it's real iffy. I sometimes respond to very easy requests real quick, and other requests that are more time consuming, I sometimes can't at all. Right? But I do try. Anyhow, so folks, that's it. I'll see you guys next week. But if you all need any help during the course of the week, feel free to message me. All right, guys, have a good weekend. Bye. Okay, later. Bye bye.
Bye, sis.
Bye bye. Bye bye. Thanks. All right, yeah, man. Later. Uh huh. Joshua. Joshua. An AS accounting paper walkthrough. Ah, I don't have any of those papers, Josh. This is Keep Caribbean. I would not mind taking a look at your AS accounting paper. If you want to email me, you could do that. Chris@adapttuition.com. All right. Okay, cool. Yeah, TikTok. So I just seeing two of you guys on TikTok. So thanks for following along. You could also message or email if you have any questions. But again, as you could be telling my class, my time real tight these days. Anyhow, guys, enjoy your weekend. Bye.